Hi everybody, Brian from Bearable Traders. It is the weekend, October 7th. This is, of course, Canadian Thanksgiving, long weekend. Hope everyone out in Canada is having a good one. And yeah, this is a weekend video. We'll take a look at what happened last week. Crazy week as they have been lately. And then we'll take a look ahead and see what we got coming up in the coming week here. We've got earnings season kicking off on Friday. Should make for an interesting end of week again. So let's get down to it. So let's start out with a week in review, as I always do here. What happened last week? Well, Friday was kind of the most interesting day. We got that employment data that came out, show that jobs increased by about 336,000. That was twice what was expected. And the initial reaction in the markets, of course, pre-markets, was they really sold off hard, showing that employment is still strong. But the encouraging part of that was the wage growth, which came in very moderately, I believe around 0.2%. So once traders and investors started to digest some of the details of the employment data, the market really turned around and rallied hard. So we had quite a swing from the downside to the upside on Friday. A really volatile day here. Oil prices have been really getting hit here over the last week. Oil prices usually go with the economy, so if people think the economy is going into recession, energy is less, and therefore you get a reduction in oil prices, which seems to have happened. 10-year Treasury, of course, it popped up pretty strongly on Friday, pulled back a bit after the market started to rally. You could say the two were kind of negatively correlated as the treasuries have been moving up, so the market's been moving down. Anyway, on the week we ended up sort of mixed on the indexes. We did manage to pull out a gain on the Qs and the SPY, IWM weakest, and of course the Dow sort of in the flat area. Again, technology really ripped on Friday, and the energy, utilities, consumer staples were the biggest losers by far on the week. Treasuries, again, we kind of moved up a little bit on, or actually moved down a little bit on the 2-year, but again, up significantly on the 10-year. This is pretty interesting. We are closing the gap between the 10s and the 2s. That means possibly we may uninvert the curve. And so we've been living with this inverted curve for quite a while. That means the longer dated treasuries are trading below the shorter dated treasuries, which is unusual. But when they sort of get back to normal, uninvert, that's usually when recession starts. So based on history. So we'll see if that holds true. The US dollar essentially flat on the week. We did pop up and then came back down. So we kind of finished flat on the week there. Bitcoin was up on the week, 27,000, trading around 27,950, I believe, last time I looked at it. So there you go. That was the week, and it was a very interesting one. Okay, so before we start looking at some charts, I just wanted to point out to everybody that my book on Amazon, How to Swing Trade, this was my first book, is available on the weekend. It is free. You can see the Kindle, the e-version is free, so you're welcome to go and download that if you want to check it out. And yeah, so no cost to you. It's your lucky day. So anyway, a little bit of a Thanksgiving gift to everybody out there that wants to check it out. So let's get on and look at some charts here. All right, so let's go back and start with the treasuries as we always like to do. I always like to do. We'll see where we're going. This 5% level is where the 2s are still hanging out. And as far as the 10s go, we made another move up here this week. You can see here, big gap up and then move higher. Move is it's moving us back to uninverting the yield curve. So usually you have the 10-year yielding a higher interest rate than the 2-year. We've been inverted for some time, and we are moving up. Now this is unusual because usually what happens is the 2-year, when they uninvert, the 2-year usually moves down, and the 10-year stays about the same. This happened back in the 80s when we went to over 20% in interest rates when the 10-year started to move up to close the gap rather than the 2-year dropping. That's why you can hear some people going on and saying, oh, we're going to head to 14% interest rates, because this is kind of what happened back in the 80s. So I don't think that's going to happen, but certainly it's something to watch. And it looks like, once we uninvert, it's quite often the sign that the recession is starting or has started. So again, we are kind of moving to uninvert the yield curve there. It's kind of interesting stuff going on. Transports on the week kind of held out here, and then Friday had that nice move up. Going to see that on all these charts. The transports again kind of held this prior level of resistance from back in these areas, these dates. So we've held here, but again, downtrend still intact. Again, big bounce on Friday on the Dow. We did so on a little bit of volume there, so maybe stochastics are starting to turn. If you go back here, this is kind of an area where there's been some pretty significant support in this area. So 33,000, 32,800 area, and right back into this range here. So maybe we're finding some support here, and of course we'll be waiting for that CPI and PPI data Wednesday and Thursday. The Qs, really strong move on Friday, and this is the index where most people are hiding out if they're in stocks. And of course the Qs, nice big volume on Friday, and you can see here we came back and filled this gap that we made on this gap down in sort of mid-September, and nice sort of gap or fill back up into that area, and we'll see if we hold. Again, we'll probably hang around that area until we get to some of that data midweek. Again, the Qs sort of range bound here, and waiting for that data. The SPY, again, SPY did well on Friday as well. Kind of pulled the rabbit out of the hat. Went green on the week, and again did so on volume. So momentum turning up. MACD starting to turn. Stochastic starting to turn. So it could be an indication that maybe there's a bit of a bottom here. What'll really throw a wrench into the mix is if CPI and PPI numbers come in hot. So everybody's watching that. SPY again on the week. This is an area that's pretty strong support. This sort of 420 area. Everyone's watching this 420 area to see if it holds. Seems to be an area that everybody's watching as a key support level. IWMs have had some pretty decent volume through the week here, and you can see here we had a nice move up on Friday, but still down on the week. Stochastics again turning up a bit. On a weekly, we are still heading down, and stochastics maybe starting to move here, but this 170 level, it did kind of hold here on the week. So that is a pretty key area of support for the IWM. VIX has been up and down all over the place. We pulled back here on Friday, and really spiked up during the week. And the dollar actually is looking like it's putting in a bit of a sort of topping action, maybe telling us that interest rates are sort of flattening out here. And you can see here on the weekly, we actually just barely managed to get another green day, but it looks like we're running out of steam, and that's not surprising given this area where we ran out of steam here before, back in September 2022. Bitcoin had a nice move up here on the first, and kind of hanging around this just under this 28,000 level right now. Possibly, it still looks pretty range bound, this 30,000 level and 25,000 level, sort of trading in that range for the time being. All right, let's take a look at some stocks we're going to watch for this week, keeping in mind this CPI and PPI data Wednesday and Thursday is going to be probably a pretty big market mover one way or another, and so have to be cognizant of that. But Apple got a downgrade this week, and you can see how it reacted. Some of these downgrades and upgrades aren't always everything they're cut up to be, but you can see here Apple had a really nice rally here, and this 170 level sort of continues to be an area that it likes to hold. So that's a pretty good place to sell puts if you're an options trader, or we're back up into an area. This 180 level is obviously going to be an area that's going to be a challenge for for Apple probably to get to, but you can see here all the momentum indicators, MACD, stochastics, RSI, they're all pointing to a move back up here, and Apple's looking pretty good going into the next week. AMD, all the semis are actually looking pretty good here. We had a nice breakout on Friday. You can see here we put in a low. Kind of looks like a bit of a inverted head and shoulders. There's your one shoulder, there's your head, there's your other shoulder, and now we've this neckline here we kind of broke out from. And AMD going into next week also looks pretty good, up to about 110. You can see here lots of support here, became resistance here, sort of this 110, 111 area. And so we're going to be looking at that level. If you're going to be long, that's going to be an area that's going to be a challenge to get through on AMD. Dell I haven't done anything with. It kind of does look like it's rolling over a little bit here after hanging around and suffering through some of the ups and downs in the market. It really hasn't been that volatile. But anyway, it's this level here at 65 seemed to hold on this dip on Thursday and came back up, but they really didn't rally much on Friday with the rest of the market, which is a little concerning if you're long. And you can see here stochastics are turning around. Momentum's really flat, so not much with Dell. LAC was something I was holding on to, and you can see here I was into it in this range here, and I knew it was going to split into two different companies, and that's exactly what they did. So they took one company and split it into two, so you have two different companies now you're holding. One is a South American, Lithium Americas, and that was so that the Lithium Americas North American operations could get some access to some U.S. funding, which it couldn't do before. So you can see here I had this big drop here. I did sell a bunch of it on this news, on this pop-up, and I sold some of the other shares that I got. I believe they're listed LAAC. So as it worked out, made some pretty good money on that trade, even though it looks like I lost money. But I actually had shares in the other company as well that were that took me well above the price that I had paid for the single set of shares. So that worked out. Still holding a little bit of them because I kind of feel like they have some potential. Meta's looking really nice here. You can see we're kind of breaking out, or we have broken out. We broke out on Friday. 300 is looking like pretty solid support, and we could be heading back up into this 320, 325 range here with Meta. And so another good stock with the price the way it is, good stock to play options with, maybe selling some 290 puts next week. We'll see how they're priced out, get a decent premium on them. And you could buy some 280s down here just if you wanted some protection and not being naked on them. So that's Meta looking pretty strong, and they are reporting on October 25th, I believe. So a couple weeks from now. So we're not getting, and so the premium on those options will probably increase as we get closer to that date. Here's NVIDIA. As I said, with AMD, all the semis seem to be looking pretty strong. NVIDIA is kind of breaking out here. People in the room know that I'm long some NVIDIA with the Canadian listing. You can buy some of these semis with on a Canadian market. They're hedged with Canadian funds, so I don't deal with the foreign conversion if the U.S. dollar gets weak or strong. And yeah, so still long some NVIDIA. Rivian came out with a secondary offering, convertible debt. Of course, that's share dilution, so you can see we had the big sell-off. I think they traded that on Thursday. Bit of a bounce back on Friday, so maybe a sort of a level has been set here, maybe around 17 bucks. Might be a good place to sell some puts here, if it might come back down, fill this gap, and if you sold some puts, you might end up owning it if you held them. But it looks like an area where there's probably going to be some support there. Charles Schwab, as you know, I've been short the calls, 56 calls. I used the money that I got from shorting those calls, and I bought 53 puts. And I covered some already when it was dipping down around 51. because those puts were really in the money and the calls had really decayed in value. So I covered some of the calls, sold some of the puts at a much higher price, some like 70 or 80% return. Yeah, it's been an amazing trade, and that was something that Artie and I had talked about. Artie brought it to my attention, and I thought that was a great trade, so took it, and it worked out really well. So Tesla again. I think they're reporting fairly soon. I'm not really sure when, but again, this had a nice bump up here, but it looks a little range bound. Had a big day on I guess that was Wednesday. A bit of a choppy day Thursday. And again, we came back up, and it looks like this sort of 260 level is an area where we're having some challenges with, which is a gap fill from here. And so Tesla, not really sure there's a trade there, although it does seem like 240 is a pretty solid support right now, and your resistance levels would be up around 280. So let's see here, and what else we got? XLE, that's energy really took a hit this week. You can see we came back up a bit, but kind of a lame bounce here. So I'm not convinced that this is a bottom, but it something to keep an eye on. And of course, this is an area where we had some support, little in this area, but again, energy really sold off. Let's take a look at just the SMH, which is just the semiconductor index. And you can see here we're kind of breaking out here. It does look pretty solid. MU, another one that is probably looking pretty decent here as well. So that's about it for a wrap. That's the stuff I am watching for next week. And again, Wednesday, Thursday are going to be big tell days in terms of where inflation is. So just keep that in mind when you're putting some trades on. And yeah. So let's wrap things up. Take a look ahead what we got coming for the rest of the coming week here, October 9th. Again, a holiday in Canada, but full week in the US. We've got the Dow, the Qs, the SPY. There's all your levels with support and resistance. And as far as economic events, we've got some Fed speakers on Monday. The real interesting stuff will start Wednesday. We've got the PPI data, and then of course the 2 p.m. September Fed minute release. We've got CPI data on Thursday. PPI and CPI sort of following each other. Those will be big sort of market moving days, and this is where people will be looking to see if inflation is continuing to slow down, cool off, which will be positive for the markets if we do get a read like that. And as far as earnings coming up this week, it's pretty light until we get into Thursday. And then a Friday, of course, this is sort of the kickoff of the earnings season when we start getting back into some of these financials like JP Morgan, Wells Fargo, Citi, PNC Bank, and of course, it should be UNH, not UNG. So that's the United Health. So that's it, everybody. Hope you have a great rest of the weekend. And don't forget, again, my book is on Amazon. How to Swing Trade is free, the e-version for the week and the Monday as well. So you can check that out. We'll see you hopefully 8 o'clock live on YouTube, where I'll start our pre-market show then, and then of course trading the market open with our members at 9:30. Enjoy the rest of the weekend, everybody. Bye for now.